A lot of people ask us why they can't purchase an LIC term plan on Ditto, or why we don't widely recommend LIC term plans the way everyone assumes we should. And here's the funny part. Most people think it's because we are anti-LIC or we don't trust LIC or some conspiracy like that. But give me a few minutes and you will see exactly why things are the way they are. I'm Shashank and welcome to Ditto Insurance. Before we get into the real story, if you want clarity on which term plan genuinely fits your life stage, goals and budget, just book a free call with our advisors using the link in the description. It just takes a minute and you get expert advice with no spam and no sales pressure. Now, let's get into LIC. So here's the thing, guys. LIC is massive. Now, I don't mean big company massive. I mean shaped India's entire insurance landscape for decades massive. This organization holds more than 60% market share in the life insurance space. Well, it has been around since 1956. It's literally older than most of the policies people still hold. And over the years, LIC became a symbol of safety and trust. 14 lakh agents, thousands of branches, presence in tiniest of the towns and the biggest metros, and a relationship with Indians that goes beyond insurance. Because zindagi ke saath bhi, zindagi ke baad bhi. Now, when you talk about endowment plans, pension schemes, ULIPs, term plans, whole life plans, money back plans, well, LIC has done it all. And it's done most of it at a scale no other insurer has come even close to. Even today, the claim settlement strength is solid, financial stability is obvious, and the brand loyalty is unmatched. And while people think LIC is old school and slow, they've actually been modernizing, and I'm not kidding. Their Ananda platform is a great example. It allows agents to issue policies digitally without any paperwork. Now, that's a massive shift for the company built on offline distribution. They even went public in 2022, and it's one of the biggest IPOs out there. And today, their market cap sits above 5 lakh crore rupees, which tells you that the brand still commands insane confidence. They're also expected to acquire a stake in a standalone health insurance company soon, which means LIC is still expanding, still adapting, still part of the future. But let's address the elephant in the room. If LIC is so big, so trusted and so reliable, why do we not sell their term plans? And why do we not recommend their plans so aggressively as private insurers? Now, that's exactly what the video breaks down. Before that, if you want a personalized explanation of which plan suits you, then book a free call with Ditto. The link is in the description. Okay, now let's talk numbers, because this is where people don't always get the full picture. LIC's claim settlement ratio for term insurance across 2022 to 25 average is around 98.35%. Now that's extremely strong. Complaints per 10,000 claims is just 4. Annual business numbers, now more than 2,27,000 crore rupees. Annual death claim paid out is around 19,000 crore rupees. Solvency ratio is about 2, which is well above RBI mandate. Average settlement ratio across 3 financial years is about 95%. Now, these are not weak metrics. These are as solid as they come. So, if the brand is strong and the performance is stable, what's the catch? Now, what this really means is that the core issue isn't LIC's ability to pay claims, it's the actual design and the flexibility of their term plans, and that's where modern customers start feeling the gap. Okay, take Digi Term for example. It's a pure online D2C term plan. Entry age starts at 18, goes up to 45. Coverage goes up to the lower of age 75 or 40 years of tenure. You get regular single and limited pay options. Sum assured ranges from 50 lakh to 5 crore with reinsurer approval needed for about 5 crores. The death benefit can be taken as installments instead of a lump sum, which is nice if the nominee wants a structured income. But beyond this, you hit a wall pretty quickly. There's no critical illness rider, no terminal illness benefit, no zero cost exit, no waiver of premium, no income benefit, no life stage upgrade, no discounts for salaried or digital first buyers or even existing LIC customers. In short, all the features that private insurers offer to match different life stages simply don't exist here. The Yuva term plan is basically the same policy but sold offline through agents, same limitations, same structure. Then comes New Tech Term. This one extends the entry age to 65 and max maturity age to 80. That already gives older buyers more room compared to Digi Term. You get level and increasing cover options similar to to earlier plan, but again, very limited add-ons. The only rider available is the accident benefit rider. No critical illness, no disability rider, no bit of premium, and again, no discounts. Nothing that makes the modern online customer feel like the policy is built for them. New Jeevan Amar is identical to New Tech Term Plan with one difference. Minimum cover starts at 25 lakh and it's sold offline. That's it, no other difference. Then we have Digi Credit Life and Yuva Credit Life. These are decreasing term plans designed specifically to cover loans. Your coverage reduces every year based on a risk schedule. You can choose to continue the policy after repaying the loan or surrender it for an unexpired risk premium value, but there are eligibility conditions. And here too, there are no riders, no zero cost exit, no terminal illness benefit, and no optional add-ons. Loans insurance is a segment where most private insurers give multiple rider combinations. LIC still keeps it extremely simple. Now, simple isn't bad. Some people want simple, but many customers want protection that adapts with life. Marriage, kids, home loans, income changes, health changes. Modern term plans give that flexibility around all these stages. LIC's plans don't. And that's where the mismatch happens. This is why Ditto can't distribute LIC's term plans today, and it's also why we don't recommend them as widely as people expect. Our job is to break down policies based on transparency and suitability, not brand legacy, not nostalgia, not emotion. So if a plan works brilliantly for your profile, we'll tell you. If a plan is missing important features that matter in today's context, we'll also tell you that. Now, a quick reminder here, if you want a personalized breakdown of which plan suits your income, health condition, liabilities, and dependence, you can book a free call with our advisor using the link in the description. You'll get a complete walkthrough of premiums across different insurers, including HDFC Life, ICICI Prudential, Axis Max Life, Bajaj Alliance, and more. Okay, now talking about premiums, because I know half of you are waiting for this part. The comparison should be on your screen right now. So let me walk you through what these numbers actually mean instead of just throwing digits at you. What this really tells you is simple. LIC isn't always the highest and isn't always the lowest. The variance mainly comes from how different their plans are. Digi Term plays this price game by keeping the product very basic. New Tech Term charges more because it's built for a wider age range and a slightly more flexible coverage structure, but neither plan gives you add-ons, riders, or modern features that private insurers include at similar or even lower prices. So the price difference is only half the story. Now, the real question is whether the feature set actually justify the premium that you're paying. And in LIC's case, the premiums are fine, but the features lag behind the market. That's it. That's the gap most people don't notice when they compare prices in isolation. To be fair, LIC's strengths are undeniable. The claim confidence is strong, the institutional reliability is huge, and for people who want a simple, straightforward plan without too many moving parts, LIC works perfectly fine. But for someone who wants modern features like terminal illness benefit, accelerated payouts, life stage upgrades, comprehensive disability coverage, waiver of premium, or early exit options, private insurers offer for more. So here's the conclusion. LIC works well if your priority is trust, simplicity, and legacy. Private insurers work well if your priority is flexibility, customization, and modern protection features. Neither side is universally better, but only one side is built for how real life looks today. And if you still feel confused between LIC and private insurers, or you don't know how to pick between 10 different term plans, you can just book a free call with Ditto using the link in the description. Alright folks, that was it from me. Drop your questions in the comments, hit like if this helped, subscribe for more deep dives, and as always, happy insurance hunting.